what is maybe the bigger driver, quite frankly, is the earnings maybe shifting and how investors are looking at these multiples. The big week is here. We have a lot with consumer data, the last Powell Fed decision, GDP, inflation, big tech earnings. I mean, it was a storm of market moving information here this week. So we have all of this to cover in this week's update. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered each week with some of the market news and the data, the trends that we're watching. And we'll get right into it because we have so much to cover. I want to cover a lot of the data and the Fed side of things as the core of our conversation. And then as we wrap up for our question of the week, we'll talk a little bit about big tech earnings and what we're seeing on that side of all of this as well. So to kick us off, going back to late last week and early this week, we had consumer confidence and consumer sentiment numbers come out. Both of them were up slightly, so kind of a good sign in terms of the consumer, which you will catch a bit of a theme here as we go. But again, consumer sentiment, consumer confidence, both up slightly. On Wednesday, so just yesterday, we had the Fed decision and, of course, the press conference to follow, which, of course, is the last one, should be last one under Fed Chair Powell. The vote, which was actually a big story in all of this, was 8-4 to keep rates as is. What we saw as a result of this is yields spiked quite a bit. What that means is, again, yields go up, bond prices go down. So, in other words, bad for bond markets in general. And basically the reason that I think we saw that was because we have 4 dissenters now and concerns of a potential hike ahead. Now, it did pull back slightly as the press conference kind of wore on, but generally, we're still seeing that as we get into today on Thursday as well. And I think, generally what we're seeing here is kind of a wait and see scenario. Probably wait and see what we hear from Warsh as we get a little bit more clarity from his perspective moving forward. However, the Fed does take May off, and so may not get much direction here for a while. May off in terms of meetings, to be clear. So it's possible he may still share some thoughts along the way, but in terms of meetings, we may not get too much clarity for a little while still. The other thing I wanted to point to is that in that conversation, Fed Chair Powell had shared that growth is solid, and he pointed to a strong consumer. He also pointed to the data centers, but strong consumer spending, which kind of ties into the data we received today. First one we received is GDP. GDP came out, advanced estimate, up 2%, just slightly below general market expectations. We also had income numbers come out, up 0.6%, and spending come out, up 0.9%. So again, both suggest that there's some strength in the consumer, and that remains to be a strong point of the economy at the moment. We also had PCE inflation numbers come out. So the core PCE data point was up 0.3%, and the headline up 0.7%. Both of these not too far off track. The core was generally in line with expectations, and then the headline was slightly above expectations, but the market's expecting it with what's going on in Iran and oil prices. So that's kind of what we saw on the inflation side of it. And then, of course, yesterday, we had some of the biggest tech companies all report earnings all at once. So I'm going to cover that here in a second. But before we break, be sure to tune in next Thursday. We will cover Jobs Week as we kick that off. And then last thing I want to cover again is what we saw out of this big tech earnings spree just yesterday. And then, of course, we have Apple coming up today as well. So we still have one more to kind of keep an eye on for the biggest companies that are out there. Now, generally, what I will share. So first off, we had all yesterday after the close, we had Microsoft, Amazon, Google, Meta. And again, we had Apple today. So that is a lot of market cap reporting all in a 24-hour period. What I will show you is that generally earnings were strong. However, the stock prices share a bit of a different story. So what we have seen is we've seen Google up quite a bit here today. We've seen Amazon up. They were up after hours, but then trading pretty flat around the open. And then Microsoft down and Meta down pretty big on the other side of the equation here. I'll share all of this, though, is primarily because of the CapEx story. So certainly there were some challenges with Meta's earnings, but generally, again, strong earnings theme. But the capital expenditure story is what's really changing things here. And for those who do tune in pretty frequently, you may remember a ways back, this is something I had heard at a opportunity that came up to kind of listen to some of the world's economists out there, and they had shared this idea that it is possible tech gets repriced in terms of how multiples are priced into tech earnings, earnings multiples. And the idea was that as CapEx started to become more and more of a spend, this may be basically a ongoing capital expenditure and not a one-time investment. Because again, these companies are likely going to have to keep investing in order to keep up with their competitors in this AI space. So far, that is what we're seeing. And that's why some of these big tech companies have had a bit of a struggle here even last year, honestly, and especially into this year. Obviously, the Iran story and inflation and interest rates have an impact on that too. But I think what is maybe the bigger driver, quite frankly, is the earnings maybe shifting and how investors are looking at these multiples. So again, a bit of a mixed bag, doesn't give much clarity for what's next broadly, and suggests, a continued theme around this story of markets kind of broadening out and really making sure that we're looking at strong companies, which are the ones that are standing out, versus simply just kind of buying it all and looking at, the largest companies there driving the story. That's been the theme in 2026. I think that will continue to be the theme through at least, the next quarter. And something that is very important to watch here moving forward. Again, we do have one more today, so we have Apple after the bell today as well. And then just for those keeping score at home, Nvidia is still a little ways out. I think they're in May, so we still got some time or end of May, so we still have some time until we hear from Nvidia. But very big companies all reporting all the same day, and then one more here today. So very big week in terms of market moving information. Hopefully this is helpful. Again, be sure to tune in next Thursday as we get into jobs week.